The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on the eve of the May World Agricultural Supply and Demand Estimates report on Thursday, had a mixed bag of trade. Corn and wheat didn't look too good. Soybeans, though, especially old crop and bean meal, able to eke out some gains on the session. We had a mixed day in livestock. We have some outside market worries with regional bank worries still floating around. Lots to discuss here today. Let's welcome into the program and say happy day to our good friend Bryan Doherty with Total Farm Marketing joining us here today. Bryan, always good to catch up with you. I hope you're having a great week so far, Bryan.
Oh, it's a great week. Maybe my week's a little better than the market's week so far. Yeah. But yeah, you're right on the eve of this report. And gosh, I know we sound like a broken records, but another week of very poor export sales. It's just like all of a sudden nobody wants anything. And you know, when supplies are tight and markets moving higher, everybody's grabbing away at it. So really disappointing in today's number. Again, 10.1 million bushels old crop corn. I don't know if it'll come tomorrow, but there's a growing likelihood that you'll see more reduction of export sales. And it's really reflective. I mean, if you think about this, it's just the way the world sort of unfolded, because the USDA in theory should have, you know, a lot of resources to try and estimate things, and they've continually chipped away. So it's not that they're wrong. It's just more of a reaction or analysis after things just developed the way they have. And that's just another poor showing, and the importing countries are just buying only as needed.
And to your point there, as we talk about this report a little bit, I look at I look at the exports side of this equation that you brought up, and I have to think that USDA does something on Friday's report when it comes to exports. I guess I'll be shocked if they don't do something. They may not go all the way, but I'll be shocked if they don't do anything at all when it comes to the export number, Bryan.
Well, I think the last month might have kicked the can down the road for months. I'm with you. I'd be surprised if they didn't. So year-to-date sales 1.511. They're indicating 1.5 or 1.850. So we only need 350 million bushels, but at 10 million bushels a week, you're never going to get there. Now, last week we had a negative number, if you might remember, because of the China cancellation. And so things have to pick up in a hurry. So I wouldn't say never or they won't, but something has to kind of spur the end user to get aggressive. And lower prices don't necessarily spur the end user. What spurs the end user is concern of higher prices. So they'll continue to buy as needed. We talked about the form of buying changing. We talked about that all year, that when there's high prices, you know, buyers, whether they're somewhere else in the world or they're your next door neighbor, they're only going to buy what they need when things are high price, or whether it's yourself. That's just human nature. Unless you're really fearful that you can't get it. And we knew after last year there was a crop, it was out there, and we harvested, and since we harvested, the end user saw it's there. So they just haven't had the urgency. We thought Argentina's drought conditions and southern Brazil, as those started to develop, maybe that creates, and actually we saw a pretty good spurt in exports in midwinter. And then as Brazil came along, the end users really just backed away from it. It doesn't help that you've got really stressful tensions with China and the U.S., and you've got worries about economic recessions worldwide. Just, you know, one thing after another that was friendly a year ago is not friendly this year.
Well, with the case of this corn market, Bryan, at the close Thursday, D's corn 513 3/4, and I look at these this whole complex, does it feel like that traders are pricing in just all this bearishness, it feels like, in this corn market? Because these cords getting pretty close to putting a four handle on that contract, which, ooh boy, I don't think anybody wants to see that, Bryan.
We're at a pretty critical zone. If you have an opportunity, or if you want to see one, contact me. A long-term December monthly chart. So what that is the activity for 1 month in the front month December. So it's either December 22 or 23 or 21, and you get a long history of that. And this 510, 520 area is really critical. If we break under that, then you're in this zone where it took us years to get back above the $5 mark. And we had what I call a trough of low prices. So now you're entering into that zone. Does that mean anything? Maybe, maybe not. But if history's any indicator, bull markets have long tails. End users just buy what they need. We seem to come back with strong production. We're increasing acres. And then, as I indicated, some of these other, let's call them tension points, I think are just keeping buyers somewhat cautious. All that being said, the thing that end users really need to watch here is if the market starts to see or perceive something that would suggest there could be any kind of trouble with the crop. We talked about this end of April, early May, mid-April for sure, that we can't get too far over our skis on planting delays. And sure enough, the last 2 weeks, if you just look at the fact of what planting progress is, it's ahead of the 5-year schedule. So a trader who's short is looking at that going, well, no reason to buy corn. They look at the export sales. Well, no reason to buy corn. Trends down. I'm making money being short. Maybe I'll add to shorts. But suffice it to say, we'll get to a point where from an end user perspective, don't get complacent. This is like corn the other way. When it's $6, $7, a lot of farmers, wanted to be careful they didn't sell because they thought it might go to 8. Don't think it's going to go to 4. If it goes to 4, it probably hits and it comes roaring right back out of there on a V-type bottom in the chart. So start thinking about how you're going to own inventory if prices get lower. And in particular time of year, we haven't even gotten to the weather market. That's June 15th and beyond.
Very, very true. Very, very true. Well, I flip over to soybeans here, Bryan, and in the case of the bean market, we found a little bit of green on the screen in those front months on the day. I wonder, we did get a daily flash announcement to unknown destinations on Thursday. I wonder, initially it didn't look like that was going to do anything for the market, but I wonder maybe a delayed reaction possibly. What's your thought on the soybeans?
Yeah, I mean, all the commodities, wheat, corn, beans, they all suffer from the same malaise. They get rallies and then they get, spanked down right away. Of the three, though, remember, the bean carryout number is around 210, 220 million bushels. Whether it's 230 or 190, it's still tight. So no matter how you slice it, we're going to go into the season, growing season, with tight ending stocks. We still have bushels that need to be accounted for from the March 31st stocks report. Remember, there's about 70 million bushels from expectation. So where do those fall into the mix? Does the USDA take it all out of crush? Do they take it all out of exports? And so the beans probably have a better story right now. But as far as big picture perspective, it is really a challenge to get overly optimistic on beans right now.
Well, and with wheat as well, I was kind of curious, just the wheat action that we saw Thursday. Down hard, Chicago, KC, Minneapolis, maybe some profit taking ahead of the report possibly. I know we've had some support in KC wheat and spring wheat just with the harsh crop conditions in the central and southern plains and then the planting delays up north, Bryan.
Yeah, so if you look at, let's call it sectors, and you look at the ratings in Kansas City, you can't hardly believe that market isn't $10 a bushel. You look at some of the delays that are likely to occur with planting on the spring wheat. Those are major things. Soft red looks pretty good at this point from what we can tell. Everybody needs a rain once a week as we get now into late or the later planting stages and then into June. But the market seems to be really cautious. A week ago, there was little expectation this corridor is going to open. There's negotiations. Now, all of a sudden, maybe that opens. The world, again, the problem with wheat is that it's used 12 months out of the year. It's growing 12 months out of the year. It's kind of this steady flow. And so far the flow, really the last 12 months, there's been enough wheat flowing that the trend is moved down. And yet there's not enough of a concern to make the world run at it to secure all the inventory it can. Not easy for a farmer in Oklahoma or Kansas to quite get their hands around. But the world has not determined that it needs to ration the inventory. And so it might get by with another crop year, relatively tight world supplies, but not quite tight enough to engage the trade industry and speculative interest to just jump headlong into this. They just haven't done it yet.
We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, you raised a great point with me before we went on the air here, and I want to get to that now. With the grain markets under pressure, especially corn moving lower, this could be beneficial to our cattle producers when it comes to feed margins, etc. So talk about that a little bit and just your thoughts there, Bryan.
Right. So let's start with this. We know the further west you get, the tighter the supply is, the drier the conditions are. Maybe not in North Dakota, but get down to the southern half of South Dakota, then go south from there. And so you've got stronger bases. So it isn't declining as rapidly maybe in those areas as elsewhere. But as a whole, we have to take a realistic look at what the market expects. Remember, the USDA on the last report said the average farm price $5.60 a bushel. Well, if we look ahead, we're getting well below that. So one of the, and I'm not saying this is etched in stone, but one of the things that I think we should always take a look at is if we have a rough idea what it costs to produce something, for farmers who produce it, if you're getting a 15+% return on investment, don't expect that to last. If you're a buyer, if it's 15% or more below what it costs someone else to produce it, recognize you're getting a bargain. Okay, so as long as the trend's down, it's fine to just buy as needed, but make sure you use good risk management. Kind of get that pencil out and sharpen it up right now. This price is a lot lower than I think anybody would have expected for this time of year. This price is maybe still higher than I will expect if we have a good crop with 92 million acres. And we talked about 478 on my 25% reduction analysis, 450. You see some analysts out there looking at, 450. So it can get lower. I'm just surprised at the speed of how quickly it's gone down to this level. But then again, if you look and just kind of connect all of the negative dots over the last 6, 8, 12 weeks, you get a better understanding of it.
You definitely do. And I think sharpening that pencil right now for our cattle ranchers, it's a good time too with this market, both live and feeders really kind of into a choppy sideways pattern here for the last little bit, Bryan.
It's kind of funny how the year in and year out, it seems like those kind of seasonal, and I don't know if that's the right word, but boy, cattle peaked in April, right? And here now they're sort of chopping and struggling, and expectations are that the retailers have kind of pushed ahead. And then you get all these mixed signals on the economic front, low unemployment, but maybe inflation isn't quite as bad, but it's still there. Recession, non-recession, bank failures, this, that, the other thing. It's creating sort of a tempered effect on, I think, even on the live cattle market, which we've argued for a long time will be a supply-driven market. We have tight supplies, and it could even get tighter if corn gets cheaper and producers say, you know what, we really need to hold back some of these heifers. We can build this herd. I can secure 12 months of feed. Those things look favorable for underlying support in the cattle complex, and really for the feeders as well. So no reason to be, pessimistic on those, but reason always to be cautious in a bull market. Don't get blindsided if all of a sudden, cattle decide they're just done going up. End user says we're going to switch buying from beef to pork or chicken.
Yeah. Well, quick thoughts in the hog trade. You brought up pork there. This hog market, I can't make sense of it, Bryan. And we it looked like a key reversal day earlier in the week, and then just feels like a head fake. We can't seem to continue that move to the upside here in this hog trade, Bryan.
Yeah, the tough number to get your hands around is really the cash index.
Yeah.
Why that hasn't, strengthened in lieu of the live cattle market and as a substitute meat. A little bit disappointed in that. The only thing I can keep coming back to is that based on previous USDA quarterly hogs and pigs report, they just didn't quite get the full count. And we've got enough inventory. Or for some reason or another, the consumer is just, they're buying beef and they want to eat beef. I don't quite get it because I think smart shoppers go in the store and they price compare. Mm-hmm. And there's a lot of smart shoppers, especially with higher interest rates. So the hog market's perplexing. The futures market has continued to signal that, boy, we're going to see the cash market come to life. And those contracts have been tempered quite a bit, and we have some pretty good down days there. So a little perplexing, probably just a matter of a combination of just a little more supply than expected and demand just not stepping up to the plate. We had great export sales. I in full disclosure, didn't check today's, but the last 2 weeks were just sizzling hot. Good stuff on the export front, so we can't complain about that.
No, we definitely cannot complain about that, Bryan. Dairy market, I see some more red on the screen there. Any thoughts before we wrap up today?
Just a broken record. Same thing. We're overproducing. Same thing they have the problem with pork is that the end user, the consumer just isn't flowing in and taking advantage of these lower prices. And I don't know if it's a shift in consumer taste or if it's just, kind of the norm that when things get a little bit tighter, some of the things that, you don't need to buy is that extra gallon of milk or extra cheese and things like that. And that seems to be the case. We're not getting a demand-driven market to overcome some of these, albeit relatively small, but increased production numbers and efficiency per cow so far in 2023.
Well, Bryan, great thoughts as always. And again, I know a lot going on in this market, whether it's outside influences with all the bank concerns in the economy or the supply and demand fundamentals and more. Any final thoughts for us? Anything you want to reiterate for folks here on today's show?
Well, again, we're in the heart of spring. We've got a lot of farmers really working hard. So again, safety first. It'll get done. So there's that. The second thing is we focused a little bit on end users who are buyers. Recognize if we get one more leg down in these markets, they're getting well below what it costs to produce. Chew on that. Third thing would be those who are producers. We're at levels where we're not, jumping through hoops to do, a lot of cash contracting or any cash contracting, but there's still tools out there that give you flexibility. Hedging futures where you can hedge it today and lift it 2 weeks from now if you want. Buying puts, things like that still have merit. Often markets go a lot lower or higher than people expect, and just prepare yourself for that.
Well, Bryan, I know folks can reach out to you there at Total Farm Marketing if they need some advice. A lot of great ways to get in touch. How can they do that?
Yeah, best way is for me to listen. Phone number 800-334-9779. Otherwise, shoot an email, Bryan with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. A lot of great resources there. Would love to field any questions you might have.
Well, we appreciate the time as always with that. Bryan Doherty with Total Farm Marketing. Thank you, sir. Have a great weekend, and we will talk to you next week.
Thank you, Jesse. Keep it safe.
And that's going to do it for today's program. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.